Hello and welcome back to the 8th weekly commentary on the Forex markets. Basically, we sit down every week on a Sunday and review the previous week's price action, and we go through sort of the key setups and key things that have happened for the up and coming week, just so you guys can have a better view on what is up and coming and have directional bias, what I'm seeing, what I thought about, and all that good stuff. So starting the analysis off, we're on the monthly chart of the dollar index, where we have seen a previous month's low sweep and a close higher. So if we drop down to a weekly time frame, we swept this low, we failed to close through it, and we actually rejected quite heavily off of this area and closed higher. So dropping down into a daily chart, just to give us a bit more of a microscope view on this, we can see that we swept this previous month's low that was marked out originally, and we displaced higher, leaving a fair value gap. So as we didn't break above this high right here, we didn't have a market structure shift at this point yet. So we did actually wait for this retracement to go in order to see if there was any rejection showing signs of bullishness from this area up towards this initial consolidation that we'll just mark out right here. So after second displacement away from this previous month's low, we shot up, displaced, retraced into this fair value gap, tagged it, displaced again. We now had a nice order block, mitigation block, and a fair value gap within this area to key a entry in price off of to target this consolidation. So that was pretty much the technical point of view on this trade. Obviously, things with inflation, I've covered this a lot in the previous weekly forecasting videos that I've done. We've had inflation on one side and the labour market on the other. We have seen quite a bit of a struggle from inflation. It's well above the 2% Fed's target, and we have seen that the labour market has also been suffering with people struggling to get jobs, a lot more unemployment than usual, and there's been sort of this conflicting view of do we lower or do we hike interest rates or do we lower them. So with this trade, I purely took it off and relied on the technicals, because there is points in the market where your model does present itself, and if it's crystal clear what is happening from a technical standpoint, I will take that entry because it's tipping its hand to me that my model is playing out. And obviously when trying to implement a statistical edge within the market, you have to be able to take trades that are based off of a model and a repeatable model that I'm comfortable with. So I did actually take an entry off of this. So if we go over to the EURUSD, this is actually the chosen pair. You can see the exact same thing marked off here. We ran buy-side liquidity, we rejected from this area, retraced back up into this fair value gap, shot lower again with a displacement, and I actually chose to enter off the 75 level, which was marked out. And if you have a look at the previous weekly commentaries, we've been talking about this sort of idea here to this initial consolidation. So with an entry, I don't expect this graded swing to get taken, because we've already retraced up into this fair value gap, hit that area and rejected off, and we've closed lower. Therefore, I'm expecting this to stay intact if we are remaining bearish on the Euro USD, and I expect at some point within this area, high probability, order block, mitigation block, fair value gap. It's a great place to enter a trade. However, I did decide to enter off of that 75 level that was marked out there. I marked out 75% retracement level, which to the zero is a 3RR trade. And I decided to stretch it a little bit more, as I thought after these displacement candles we did have legs. I did close the trade after we took this low, just as I thought, the position I'm in, I really wanted to take this. I wasn't in a comfortable position to go break even or hit trailed at this point, and I was happy with the trading idea. Now in hindsight, there's nothing wrong with holding this idea. This is perfectly viable if you sat on this and thought, I'm going to hold through the retracements, which isn't a bad idea either. Sometimes there is a case with swing trading of if you are on side, you need to be able to hold them winners and make sure that RR is playing out. However, with a 3.8R, I was pretty comfortable that this had played out nicely. The next thing I would be looking at is this area right here. This would be my area of interest. At the minute, we're too low within discount to short. Where would you, nicely put your stop loss? If I just place this idea here, if you were taking a previous day high sweep here, I would want my stop loss in this area. So that would just make no sense. So I would definitely be looking to see if we're going to retrace up to this area to get a nice entry again within this, using the same idea from a technical standpoint. We did actually managed to close this out, which was nice, and I'll be doing a full trade breakdown, again running through very similar things. It's all the same stuff, just of why I took this, maybe just in a bit more of a package video focusing on this. Moving over to GBPUSD, this seems to be sort of lagging behind the euro, to be honest. If we actually have a look at how much this initial range was broken by on the euro, this is the same range here. However, it's just, didn't slam through it quite as much, which shows that the euro is actually weaker at the minute, which is again nice to have the correct pair selection for the trading idea. However, if you did get any sort of retracement within this area higher up, you could have got a really nice trade there, a bit close to stop loss. So again, this just shows the importance of making sure that stop loss is placed in a logical area where if you do get hit out, you are happy with the outcome of the trade. You don't want to be sort of trying to get in because we've had this swing here and you want to get in here. There's always a chance that we can just stay around this area until we go, and this is a perfect example of this. We don't just hit this area and reject off. We do bounce around in here before it does go our way. So it's always important to make sure the stop loss placement is placed in an area that you are, if it does get hit, you are categorically wrong on your idea, or you've just done something within the trade where you maybe shouldn't have. I'm happy with my model. This is what I've back tested. This is what I've got statistics on. This is what I'm happy with losing. So if we do talk a bit more about the fundamentals, Trump actually on Friday spoke about putting a 100% tariff on China, which brought quite the reaction out in the market, to be honest. We had a significant drop on the S&P 500 on the Friday. We had a huge daily candle, which was it's saying here 3.3% drop in a day, which is a hell of a lot of a drop, hell of a drop within one day. Gold actually seems to be remains unaffected by that. Crude oil took a huge dive on the Friday. We actually saw a massive drop on this, and I know Bitcoin was the same. Bitcoin took a 10% drop, I believe I heard. Try and have a look at this. That Friday candle is pretty damning, to be honest. However, we're still within this range. We've not actually shot down too low yet. So with it being a tweet that was actually about this tariff, we've seen this time and time again this year. It's just volatility within the market that can easily just be, everyone thinks everything's going to shit, but then actually after a couple of days things recover and then we kind of move on. It's just the erratic nature of having Trump sort of tweeting things out and making statements on tariffs that get removed and get put back on. So it can just be noise until there's something confirmed and starts to affect the markets. With the government shutdown, we don't have much data coming out, to be honest. I'll just pull up the FX calendar. However, it's been pretty dry, to be honest. Again, from a volatility standpoint, we didn't have any of the news. Last week we had some sentiment stuff, but we didn't have the big numbers. We had the FOMC thing, but nothing too set in stone. If we go to the week up and coming, let's just pretend as if we are going to have these news events, so I can just give a bit of guidance on what to expect. Monday is USD bank holiday, CAD bank holiday, and JPY bank holiday. There's no point in trying to look for trades intraday within this price action. Tuesday, Powell speaks, which might be good, but that is in the afternoon, so there's no point in trying to look for trades in the London or New York session. Wednesday, again, not much news. And then it's Thursday, really, where PPI and retail sales and unemployment claims, again, with the labour market struggling, and unemployment claim data is heavily anticipated. And Friday, there isn't much either. So realistically, I'm still expecting longs on the dollar through the technical analysis. I'm expecting shorts on Euro USD, GBP USD, anything crossed with USD, I'm expecting down, bearish, obviously the inverse correlation, and anything that's USD first, I expect that to trade higher. So Thursday is where I expect intraday volatility to be within that direction, and that's where I'll be hunting sort of stages in price. However, if we do get early manipulation within the week, I could look for that swing entry that I pointed out towards. And then Friday, I don't expect much. However, again, with the same thing, data, with the government shutdown, I wouldn't be expecting too much volatility because it's likely that these news events won't come. But we'll have to see moving forward. So that about brings this video to a close. I think we've covered everything that I wanted to cover. We've had this previous month's low sweep. We've been showing bullish signatures in price all the way up. We never know how far this is going to go up, so I'm just going to keep keying off bullish stages in price. This was the last swing within that fair value gap, so this would be the range that I'm looking to work towards. And that covers about everything that I wanted to cover in today's weekly forecasting video. So if you guys have enjoyed, please leave a like, please subscribe if you are new, if you found it valuable. Tune in every week. It's usually a 10 or 15 minute video where you can just get a bit more insight on what's going to go on, how my views are in the market. Again, it's not financial advice. You guys can make your own decisions. It's just my outlook on things. So thank you very much for watching today's video, and have a safe week's trading.